The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days at 11 o'clock till noon Eastern Time at 877-927-6648. And thank you, Steve, for 2 great hours. Tremendous information there. Hey, I must tell you, we're all about education here. That's why we show these charts. That's why we talk about the techniques that we've developed over the many, many years. Combined, I don't even know how many years we've got here combined. Some of us have been in this business many decades. Tonight at 6:30, Dave White, you've heard Dave White have some absolutely fabulous calls and certainly tremendous option calls. He's going to be doing a special show for his subscribers. Now, you can join the show. This is the webinar tonight at 6:30, where he's going to be discussing options, how you can use options using ETFs and other instruments, as well as discussing his newsletter, I'm sure. And that'll be free to subscribers. Now, you can also join if you subscribe as a trial, which means that you don't have to take the trial, but you can attend, of course. Be great if you stay as a subscriber. But in the meantime, this is something that's going on tonight, Tuesday night at 6:30. Please consider it. Go to the front page of TFNN, and you will read all about it. Now let's go to the markets themselves. Let me move this over just so that I can start running the numbers. I think that's the very best, if I can find it. Come back. Uh-oh. Where did all my... It's not there. Okay, give me 1 second. I didn't realize I would not have the whole story there. And I'm not going to be able to answer that, so we'll just do this. Wow, what a busy morning, huh? It was so quiet. Now all of a sudden, what have we got? We've got... you'll have to call back. Thank you. So that's very interesting. I didn't mean to press that button. I was trying to get the silence on. Let me just run this down. The Dow's up 88 at 15,890. This is really fascinating because there were many signs that would say, under the circumstances that we had of 2 fabulous days and an almost doji-like session yesterday, I won't be able to answer you, so don't do that. Ignore. I didn't even see that ignore button all these years. So it's interesting. So what we're looking at here is 2 very strong sessions. That was Thursday and Friday. Monday comes along, and for some of the charts, it was like a doji, a very small candle. The follow-through today, even if there's a complete reversal by the end of the day, what we're looking at is having pushed in the E-minis above the 1801.25 level of the 29th. That's really important. I happen to like what I'm seeing right now. I think that this is very good market action. In fact, I want to go through a couple of things, but I'm going to do this. I will find, there we go. So the Dow right now is up 92 at 15,894. The S&P is at 1807.75, up 7.91. The comp index is up 14 at 41.62. What you've got is gold. The GLD is trading up $1.36 at 124.30. Now, there again, I'm going to try to go to the charts in a moment. But it was looking very much like gold was in a move to the upside. Well, the day's young. That should start to turn down later today and then have a weak session Wednesday, maybe into Thursday, as a pattern that I talk about very often called the Chapman wave stork leg formation unfolded. We'll get to that in a moment. I don't want to change right now because you know me, I'm liable to stay there and forget to come back here. So the crude oil is up 13 cents at 100.20. This is the continuous contract. Dollar is down a tad at 80.48, and we've got high-grade copper still in that 13.20s area. I got to watch this real closely. Silver is up 10 cents at 20.22. You got bonds down 630 seconds. Now, what's really important about that is that the 105 level on the TLT is trading at 106.53 right now. The TLT really must hold 105. So as to break that, we start to see the yields start to rise again. I'm suspecting that just for the moment, we're going to be looking at a sideways move in the yields, sideways movement in the overall pattern of bonds. Now, let me do this. Now I can jump over. I can say a couple of things I wanted you to look at. This is that naked chart. Remember, I was doing this. I started it on Friday. I was just showing how you can go to a D and maybe an E and an F even in the what I call the naked chart. And let me take it all the way from here, from 11 o'clock on the 10th. That was yesterday. So, well, that already completed from 7 o'clock in the morning. You had completed in the 10-minute chart a peak ABCD, pulls back, and then it starts what became an up channel. And that went to ABCD. It also ran up to an E and an F, and that F stopped right at 8:30 in the evening. It stopped at 1798.50. Then what happened is it made a cup formation, broke out, and then there was I call it a naked chart, but I can use lines. I just don't have the moving averages and all the other stuff that goes with it. But trend lines are really important. What these trend lines do, they show that you can have, in this case, an inside track sell zone, repellent zone. And that's exactly what happened. Price went to, that was wrong, right? I meant to take that out. That went to an E and then an F again, a second time, also with a doji candle at the reversal right there on the 11th, which is today. Today at 1804.50. That was at 5:20 this morning. And then what happens? It pulls back and pulls back. I showed my subscribers this chart like that. And what I said is that we should arch over and we should break the support here. That's what I'm expecting. And then we're going to have to see how certain levels are holding. I believe I said 1795 was the level. Well, it went down to 1795 exactly, 1795, and turned around and we've got a peak ABC. Now, I don't know whether I should continue the up channel, because once an up channel has been broken, it tends to become resistance rather than support. In this case, not only did it become resistance for a moment, it powered right through, and now you've got support at 1802 to 1801. Now, what's happened is you've gone to a new recovery high at 1804.75. So this should hold, and you should make a leg D. I'm just doing this, as I say, based on the Chapman wave methodology. A lot of people ask me, could I just show it a little bit in greater detail? Now, look at this. 1804.50 was the high at 6 o'clock this morning in the 120-minute chart, and 1804.75. So it's gone to a leg C, and that says even the 120-minute chart should be moving. Now, we have one of our dentists who's really taken the Chapman wave methodology to heart and done some absolutely fabulous work trading it for quite some time. And what he's done is he's used, and I thought I would experiment with it a little bit. He's used a 300-minute chart. Where is that 300? There it is. And I thought, you know what? He's done so much work and done so well using one or two contracts in this particular mode of a 5-hour chart. And the 5-hour chart is actually quite perfect because 120-minute chart is closer to the intraday. The 5-hour chart takes you to something that's different in the sense that this is really the perfect medium between the 24-hour chart, which is the daily chart in the futures, because it trades almost 24 hours a day, and then the next level would be maybe 6 hours or 5 hours. And there we are. We're in leg C. I've got in the 120-minute chart. This is a different thing altogether. This is the 300% long. This is Salix Pharmaceuticals. Didn't even realize. Sometimes I'm just doing these charts. So now we're going to go to, this is the one that I want to look at. Yeah, leg C in this chart above the 200-period moving average. And you remember when the 9 period starts to cross the 200-period moving average, that is important. But it's only important in the sense that it gives you a little security. But if you use it as an indicator, remember, 200 bars looking back, crossed by 9%. Oh, no, it's not even that. It's 5%. You're talking about using such diverse parameters, an extension, a very long extension on the one hand, and a very short term on the other. I would use it just as perhaps a confirmation of something, but that would not be the indicator. It's just something of importance. When it crossed down on the downside on the 24th of January in the E-minis, that 300-minute chart, and crossed down and went to 1780, that was a good sign that there would be weakness to come. Why? Because the beta, I should actually refer to Dave White for this when I use these mathematical terms, scientific terms, because you got to actually understand fully what you're talking about. I'm talking about the distance between the two parameters of the fast-moving average and the slow-moving average in this case. That is a very important indicator. In this case, I'm not sure that we're going to get such a very big crossover of the 9 period to the 200 period to create that kind of beta, although the MACD is good and the stochastic's at 95%, and that's saying it should go high. But he trades the NQ14, that is the NASDAQ E-mini, and there I've got leg C. And that leg C has a fabulous MACD. It has the stochastic at 97%, and now you have no choice but to go with a pattern that says there is a distinct and very sharp cup formation forming. I don't always necessarily have to go to the low bar that was formed. And in this case, it says if you were to do a left side, right side price time match to the NASDAQ, I'd have to go to that candle right there as a starter candle right there. And then I would go red. And then I would change that immediately to green. Whoops. New. And I've changed that to green. And that says if this continues, then by tomorrow, the 12th, sometime tomorrow morning, we should be trying for a test of the 36-35 level. My eye says I also have to use another technique. And that technique says you've got to take it from there, go all the way up. But normally I'd like to cross. I'm going to be a little conservative, and I'm going to say by the 13th, round about the afternoon session, we should be testing the 36.25 high. Anyway, I'm just put that out as an experiment in the Chapman Wave methodology just to show you live right here. Now, let's do this. I wanted to do a couple of things because, wow, music already, huh? Music already? Okay. Oh, talking about music, the Boston Symphony Chamber Players marked 50 years anniversary on Sunday afternoon. I went to the concert. I talked a little bit about it because it was just fabulous.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman. We're back, and I just want to do a couple of things here. I had questions in the den, a bunch of questions, in fact. INVN is Invensense Inc. I remember this. I said to myself, when you've got to stutter through the name, if you've got to Invensense, it just, all right. So it's almost at all-time highs. I appreciate that. But boy, you guys, you should change your name or something like that. Invensense, whatever they do. I'll check it out in a moment. Leg D in the monthly, but it has to clear 2235, which was the March IPO. When it came out, it ran from the 8 or 7 level all the way to 2235 in March of 2012, and 2209 is the high thus far on the spike that we've just had. In the weekly chart, we've got peak A, B, C, D. Let me do this. Actually, let me just do that from the doji. Oh, I love this. Doji low. And then it goes to, it's not making it easy for me. 13, 13, 13, 10. So that's an A. Folks, this is the way we do it. A, B, C, D. And then it goes E, because the MACD fast-moving average was so strong. It just continues alphabetically up to a G. And you don't get a down arrow until that G. And then what happens? You get an up arrow, which you wouldn't know. This is one of the toughest up arrows to put in, because the MACD and stochastic are terrible as it's made a low, and it starts to make nominal new highs. Gray A. Whoops, gray, I put an S. Gray A. This is the weekly chart. And then it goes to a B. And the object in the Chapman wave is to get to at least a D, because that's where you can often find the deepest corrections start, or it recycles. And it's in leg D in the weekly chart, having made a kind of a cup formation. So far, it hasn't closed above the high bar of 2182 made in the week of 18th of October. Man, this is a good-looking chart. I wish they would change the name. InvenSense. I'll have to figure out what they do in a minute. So look at this. Each low I'm taking, remember the Chapman wave, you look for the most identifiable low, start a wave count. The wave count should take you to at least a D, E, or even an F. There goes to an E. Plop, it comes down. And on the way down, it's very bullish. If it doesn't go to a D, it can be bullish if it goes to a D, but if it doesn't, if it only goes to a B or a C, that's like on the way up if there's a C minus failure. So now you've got an A, a B, a C, a D, and an E, and then an F and a G. That's what I call, that's that double camel hump. That's the double stochastic failure pattern that I like to teach in my courses. So this is a brand new single leg A up. Man, this is a nice looking chart. All I can say is the gap up today is great. I like it. If you own it, I would just keep your core position, and I would say if it pulls back under 19 in the next 2 weeks, but if this is an artificial move, it'll break under 19. That'll be a negative, and say be careful. It's going to go for quite a few weeks of consolidation. If it stays here, and in the next, today's Tuesday, if by Friday afternoon at 4 o'clock, it has not only just pulled back a tad, but it's gone above 22.35 or higher to all-time highs. To be specific, 22.35 was the all-time high back in March of 2000. If it closes above that, that says that's a brand new leg B. This is a very positive chart. I like it. I like it. Let's go to Rich in Orlando. Hi, Rich. How are you?
How you doing, Basil?
Very well. Thank you.
Good. Good. You look good on Skype.
Ah, you can see that.
Yeah.
I thought it was just an experiment. Oh, my engineer is amazing.
No, you're live.
Of course, you don't know it's me. Then being Skype and all, it could be anybody, right?
That's true. That's true.
You'd like to go to what?
Well, the particular stock is TTI, but it's part of the energy complex. And, I mean, they came out with their earnings yesterday, and so there was an awful lot of, like 5 times the average volume, but it kind of actually held up reasonably well. And then today it actually took off nicely. And it's really the question as to, is there any, with the market in general, it seems like it's picking up, so I don't know if there's some legs here or not. But TTI is the company.
Okay, now this is called Tetra Technologies, Inc. And I'm just going to, have you got a moment to, can I babble for a little bit?
Oh, absolutely, absolutely.
Okay.
Sure.
Many years ago, I'm talking maybe, well, I'm not going to be able to because they've got a break coming up. But we're talking about maybe 15 years ago. I'll tell you about the Tetra, and it's an amazing thing. What a story this is. I'll have to regather my thoughts about it. It's about the Tetra automobile. I'll be right back with Rich in Orlando. We're looking at a good-looking chart on the daily, but we'll have to do a little more work, and we're talking about Tetra, TTI, and I'm talking about Tetra, the car.
Andy Heck's powerful weekly newsletter, the Techno-Mental Commodity Report, has delivered multiple triple-digit winning trades in recent months, and now's a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. When you sign up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. You'll be under no obligation to pay anything, and should you decide to continue, you'll lock in the low rate of only $59 a month. That's less than $2 a day. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back. Let me just double check here. See, I've got everything organized. Okay, going back to TTI. I'm going to do TTI quickly before I tell my story. Right now, this is a stock that had a double bottom low at 9 on the 3rd of Feb. It went to 9.95. It ran up for a couple of days, hit the 9-period moving average, plop, it came down and went to a lower low yesterday of 9.92, but it closed above the left side low. That's good. The MACD and stochastic, in fact, were turning around and giving a positive divergence. There was also a huge volume spike yesterday. I tend to like volume spikes like this because if you look at this stock from the weekly chart back in the 9th of August of 2013, there was a huge volume spike, and then what it did is it ran up for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 sessions to go to peak E. But the volume spike technique that I've been working on for quite some time now says that a volume spike can go 18 to 28 days. We could even go 28, and then we've even seen a huge volume spike in the daily give you about a 52-day up move before it retests the low. So in this particular instance, the action today has made the 200-period moving average in the weekly very important. It touched the 9.80 level of the 200-period moving average in the monthly, and now what it's done, this has to be a news-related spike. I can just ask you, Rich, do you have any? Is there any reason why it spiked like this today?
Yeah, they came out with their earnings yesterday, and
Okay.
while the earnings themselves were a little bit on the disappointing side, the forecasts for the company were very positive. And it's actually similar. I mean, actually, historically, you pointed out about August of last year, but it's done this a couple of times. You know, where it's like the earnings come out, it kind of gets hit, and then turns around and comes out like a vengeance on the positive side. And my question really is that, you know, are we going to see maybe a repeat of that, or I'm really kind of leery of the market itself. It just seems to me this market is really,
Rich, what I'm going to say to you, excuse me, is that look at individual stocks at this particular point. I'd rather be looking at individual situations and not be talking the market. We had a massive move in the volatility index last week. That just doesn't happen out of the blue. And because of the failure going to 14.41 right now in the VIX, I think a huge amount of the selling has been done. In fact, I'm now going to raise the base of support in the Dow. And before the end of the show, I had a question about the notation in the Dow. I'll go to that. But at this particular point, what I'm going to say to you is this. I see some risk, but I see very little risk in terms of, I suspect that TTI, Tetra Technologies, will come back to 11.17 where it's trading right now, even if there's a bit of a pullback over the next few days. So I'm going to make the suggestion that you start a small position now, treat it as a small position, and if it starts to take out 11.68, the high of the 22nd, on the next pullback, you can add to it if on the pullback it holds nicely and then it starts to creep up towards the high that it just made in 1160s.
I currently am in the stock. I'm in the stock at actually 1040.
Oh, then it's very easy. If you're in at 1040, all I'm going to say to you is if it acts very well, you might want to keep that as a core position. If it doesn't break 1063 to 1054, very important support over the next 3 to 5 sessions. Instead, it hangs around you and makes a new high, a new recovery high, preferably going to 1150. I would treat that, the same thing I was just saying, I would use that for a position as a trading position, and the trading position would be anywhere between, I'd like to have a new recovery high in the next day or so that's above today's high, whatever that is. Let's just say it's 1135. If it goes above that, then pulls back, treats 1118 to $11 as support, starts to move higher, I'd add another little position. That would be a trading position, and that'll give you a great deal of comfort in your core position because you'll be in and out of this of the trading position as it goes to each higher peak, because the one that you wanted to surpass is 1168 from the 22nd. That's very nice. Now, let me just quickly tell you about the Tetra. I took my daughter, oh man, this is years ago, to a photographic show. She was very involved in photography. In fact, she got the prize at Newton North in her senior year for photography, although she did many other things as well. I took her to the show out in Burlington, Massachusetts. I think it was Burlington. And as we're driving in, it's a Saturday afternoon, I see this little tiny car that looked like a Citroen, a French Citroen. As I'm looking at it, I turn to the right and I see another spectacular car, way bigger, but it's like a coupe, but it's from way, I couldn't place the date. And I drive towards it, and there's a guy standing there. I start looking at the car, and I take a picture. I happen to have the camera, and I'm telling him, he tells me a whole story. I don't know if it was a James Bond, some kind of movie that he was in. It was his car. He was from Canada, and it was called a Tetra, and that there were only two that were known in the whole world of that particular 1939 or whatever it is, and it was a car that was used to take people between the back seat. It was only two doors, and it was a very long, it looked like an old 48 Pontiac, and it had big wings or something like that. A big fin like a shark at the back. And he said between the engine, which is at the back, and the rear seat, there was a little compartment, and they would smuggle people out from Germany to Czechoslovakia, I think it was, and they did it. They did 400 and something people or something like that. That car, which had a bullet hole in the window shield, was the car that was used in whatever movie it was. And I verified the whole thing. This was the guy. It was him. It was his car. It was just amazing. And it was the most beautiful car. It was called the Tetra. So that's my story about the Tetra. But I like the stock. I think you've got a great entry point. I would just deal with it as step by step. This is just the first step. What you really want is in a week and a half, you want to see this trading in between 1150 and 1175 or higher, but at least 1150 to 75, and that would say that it's improving on the weekly and the monthly would improve. Thanks for calling and congratulations. Great entry point.
Thank you so very much. Appreciate it. Bye now.
Thank you. Let's go to Brian in Jackson, Mississippi. Hi, Brian. How are you?
Doing fine. We're on some winter weather moving in here, believe it or not. We're supposed to get some ice tonight, so...
Oh, my God. Well, we've had we've got bitter cold weather right now still. You'd like to look at?
Yeah, I know you're probably tired of looking at UNG, because I know you look at it, but I've been in and out of it the last couple of weeks. I've been playing these reports, using an option trade on the UNG. And,
okay, do you have one right now?
I put one on this morning. I bought a March 23 call.
Okay, now what I've done, if folks have been listening, know that I've been talking about UNG and natural gas for a long time. I said that the pattern in the monthly chart, especially on the NG continuous contract, was just a perfect H pattern that can break out and go to a leg D. And that'll happen if it goes anywhere above 4.672, which was the high of April of 2013. And lo and behold, it's gone to that leg D. Now I think that you've got to be a little bit careful. And not only that, in the daily chart, it actually did make that peak C. Oh, it's amazing, a D. It's just amazing how many times you get peak Ds. You've got a peak D now in the daily. You've got a peak D in the weekly. I'm going to say to you, be a little bit careful, because there's a chance that natural gas, I'll tell you what I'm looking at if I'm looking at the UNG. It's very important after the candle of yesterday that if you've got a February or a March call.
March.
March is good. Okay. So if you've got the March call, you have a little time. What I'm looking at, wow, what happened to my throat? Excuse me.
I'm in the money. I'm in the money barely on it now, but I mean,
right. That's what I'm looking at. But what I'm going to make a suggestion is, this might be 2 or 3 trades. I would do this. If you can be in the money, and this can pop to about 23.78 to 24.5. I'm inclined to say, I don't know how many calls you've got, but have you got more than one?
I've got 5.
Yes. If it pops up, I take at least 2 or 3 off. You're going to get plenty of opportunity to play this. And I'm suspecting that on the weekly chart and maybe even the monthly, that natural gas might have made a fairly significant top at 23.31 in the UNG. I don't know yet, because the stochastics pull back in the weekly under 80%, but the MACD fast moving average is still good. That'll be support, but it doesn't say it's enough support to take it all the way back to the highs. So I treat this as a trade. Many trades, I think between now and March, you're going to be able to play the upside and the downside, as natural gas might be stuck, UNG particularly, between a high of, I'd say a high of 25.67 to 20. Well, if it gets to 26.20, it could retest the 20. Why did I say 23? So 27.31. I'm sorry, the high of 27.31. Wow, I didn't write that. Print that. If it gets to the low 26s, then there's a chance it could retest the high. But I'm suspecting it's going to make a little U shape that turns into an M shape, and that pretty much the high of any bounce here will be between 23.86 and maybe 24.20. So I'd be inclined to take profits and see if you're at 23.80 to 24.20. I might even flip to the put side, and then I would play. I just treat this as a trading range between a low of 22.50 call it 2290 to 2250, and a high of 2386 to 2420, at least for now. And if it does on the next move, really, if it's going to pierce 2430, 2450, it's going to do it really quickly, and you'll know immediately, because I think it'll just go straight through. I think it's going to stop. It's going to make an H pattern that turns into an M pattern. So I think your entry point is quite good, but I do not want to see on this put position for it to start to break under 2288, because it might want to retest the recent low, and that low better hold at 2250. Otherwise, it could even start to try to fill the gap down below 2207. So the next 12 to 14 trading hours going to be really important that it goes at least to 2340. If it does that, there's a good chance it'll go to the target of that 2380 area. So treat it as not a buy and hold position. I would use it as a trading position. But your entry seems to be quite good right now. So I wouldn't want to waste.
It's a little small inside day forming, and I was going to see if that held, because I wasn't going to risk a whole lot. If it goes below 22, I was going to get out of the calls. But you're on 22.
I would actually say to you, if UNG goes, it'll start to fill the gap underneath 2306. So I'm suggesting that if it even goes to 2292, I'd say, hey, I'm going to get out of this. I can always get back in.
All right.
Because I think it will try to test. The 200-period moving average is at 2242. My suspicion is it's going to retest that before it actually gets to the 2380s.
Can you do me one more favor?
Yes.
Breaking up.
I'm sorry, you break up. What was the question?
GLD, it looks like it's breaking out.
GL?
No, GLD, Gold Trust.
Oh, GLD, okay, yeah. Now, this is very important for the GLD. In fact, thanks, I wanted to do this. Yes, the breakout here, this is a very strong, I'm calling it a leg E, but the pattern that I had shown the other day of that leg, the body, and holding the 9-period moving average, this is a little bit high for that pattern that I call the Chapman wave stalk leg. Also, it didn't take quite long enough sideways for it to be that pattern with the body. But what really is important, I was anticipating by the end of the day, or perhaps by tomorrow morning into Thursday, but over the next 1.5 days, I didn't know when it would start, that gold would be pulling back. But this is fabulous action. I like it. And I would just say, I'm just upset. We had nice positions in the metals, and I got out of it. I just way too early, and that's the way it is. But I think you're right. This is a very nice breakout in the GLD. Stochastics at 82, MACD's very good. If it does anything, it's at 124.48. It might just test 122.50, go underneath the 122.51 area, just very briefly, go sideways, and then start up if it's going to have any consolidation at all. But this is very nice action in gold.
Thank you very much.
Thank you so much for calling. Always appreciate it. Brian in Jackson, Mississippi. Let's go. Now, I've got a question, and let me do this before I forget. The question was, why did I not call... Oh, the notation that I had, and this is for leg A. I have to tell you, everything about the chart that I'm looking at, from the low bar, that doji candle low bar in the Dow from 15,340 on the 5th, this looks like a buy signal that's going to go to a buy mode. I don't know if we'll go to new all-time highs. We'll be back straight after this. Dow's up 137.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. There were plenty of questions during the show in the den. GE is very important. It's made a little double bottom. It's trading at 25.35. If G is able to get to the 25.60s, preferably the 25.70s by Friday, having held the weekly up channel buy zone, important inside track in the Chapman Wave methodology, that'll say, whoa, save the day. How high you go, I don't think you can go back to 28.09 right now unless the entire market is starting a new bull move. And I'm going to hold off on that, although I must say all the positions in my opening call that we wanted have been on the long side the last 2 days. So that's all I can say. So that was that. VMware. VMware is also, it's an important stock in that particular sector, software sector. That's kind of done the same thing in its own little way based on the monthly chart. We need to see if we can get into that candle of last month, and at least it's at 93.54 VMW, and that's the same, almost the same as GE. The daily just has to move higher, and it has to get into that terrible candle, inverted Roman candle of the 29th of January. at 96.68 was the high, 91.41 is the low. It's in the middle of that. If we can even get into the 94.60s by Thursday or so and hold, I'd say, whoa, that's good action. The weekly has been saved. There was another couple of dollar DXY, and then I'll go to the Dow chart. The dollar is just not acting well. It's failing, and if the dollar hits, if the dollar goes at 80.48, I'm going at this is a continuous contract. If the dollar continuous contract breaks under 80.30, the low of the 27th, then the candle, that doji candle with a low of 80.15, that's going to be something to watch. So I quickly covered a number of the questions. I did the Qs and the daily. If it breaks the round number 90, that's going to be really important. And one other thing, and then I'm going to go to the Dow chart. The IBB, which we failed, we now been trying to buy it. We missed buying it today. 254.11 was the high at peak C on the 22nd of January. I should have believed in my Chapman methodology of going to Ds. I didn't. I kept trying to short. We also went long, but in the meantime, we missed going long today. And it's the high today, 254.49. It is in leg D, I believe. Yep. Leg D, finally, leg E in the weekly. We missed getting this move. Darn. I really wanted this on the long side, having flipped positions. That's really important with the IBB. Now, the Dow. Let me go to this chart, and I'll explain what I did. In the Dow, that's starting from, I used the peak D. Oh, this goes back. Let me explain quickly. The peak D that was made in October, on the 30th of October at 15,721, pulled back, held the 9-period moving average, hit 15,552 on the 5th of November. That was the body of the technique that I used. Then it ran up, and it went to peak A, B, C, and D, and that was the head at 16,174. Then it formed the beak. You know what I always say? When the beak concludes, really concludes, it can't have a bounce thinking it concluded. It has to completely conclude, which it did at 15,703 on the 12th of December. That started a brand new move to the upside. That upside could have been A to B, but what happened was the price started to come down, and I had an alternate count for those of you who remember. And then I said, no, I think that this is a continuation of that peak D. And this is that double camel hump aspect. This is the double stochastic hump. And it went to peak F on the 31st of December of 16,588. And then it pulled back all the way to the low of the 5th of February at 15,340. Now, this is still leg A, and it's gone from left side to right side in an even quicker time price move than I would have expected. That's number one. Number two is, when I'm thinking of this, I have to go to we've got North coming up. Folks, stay tuned for a most fantastic option show. I'm going to do this one quick thing, and I'm going to do it right now. This is the volatility index. Remember the fuss I made about it? Well, now it's trading under the 9 EMA, under the 200 EMA at 1443. I think there's a chance we can just keep going higher for this week.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.